I want to go over how the bank traps you when it comes to Forex. There's a lot of people that say that, trading Forex can be a scam, and in some ways they're right. You know, a lot of times, Forex is a great platform. It's something to where you can generate a lot of money without talking to anybody, without trying to sell anybody anything. So it's a great platform for people who want to make money at home. But there are some things that are traps when it comes to trading Forex. And the answer lies in a lot of the free education that you get, through Google or through like some YouTube channels that just show you just the very basic education. And one of those principles in that education is to, buy at equal lows or buy at equal highs, because that's a place where the market is respected. So right here, this is Euro AUD. We have a level that price is respected for a considerable amount of time. So basically from here, it broke and it retested, it tested again, and then it finally broke, and then it used that as resistance, broke again, used that as support, came up, and then came back here, and now it's holding. So in regular trading education, you would be taught to buy in this area here. So you would be taught to buy here. At the bottom of this range would be your buy. That would be buy number one. And then from there, every time you buy or get into a pair, you want to make sure that you've covered your stop loss. So for intensive purposes here, what I'm going to do, I'm going to just put this red line, this red box as your stop loss. A lot of people, they put their stop losses about 30 pips from where they buy. So about 30 pips from where they buy. And they target, the next high. So they target to go beyond the next high. So from basic education, you would learn this. This would be your entry. So let's play it out and let's see what happens. So basically, price goes up into this area. So, you're thinking that you're right. You're thinking that, oh man, I'm making a lot of money. It's going to go to my take profit. But, but on here, this would be buy number two. Oh, it just broke and it just retested. So here's where I'm going to buy again. I'm going to buy in this area because it broke and retested. So I'm going to stack my money. I'm going to stack a trade. I'm going to make a lot of money compared to what I'm risking. And I'm going to flip my account. So I'm going to over leverage. I'm going to flip my account, and I'm going to stack my buys. So I got a buy here and a buy there. And I'm going to make a lot of money off of this trade. So we let that play out. The bank knows you're doing this too, because the bank knows exactly what your general education is. So here's what the bank does. The banks are the ones that can move the market. So we play that out. You're thinking you're about to make money. Oh, it's just a little bit of time. It's about to make money. Oh, what's happening? It's not falling. Oh, shoot, what's happening? And it keeps going down and keeps going down. It's like, okay, now you're losing position on this trade. You're losing that trade. Oh, it just hits your stop loss. And it hits your stop loss. From the moment it hits your stop loss, it starts to go up. From the moment it hits your stop loss. So, and your original take profit was up here. But it hits your stop loss, you're already out of the trade. Watch what happens after you get out the trade. You would have won the trade. From just this instance alone, you would have won the trade. And this happens time and time again. So what's so significant about this area here? There's no support here. There's no structure in this area. What's so significant? And the answer to that is liquidity. They teach you to buy at equal highs and buy at equal lows. But in reality, what you should be thinking about when you're trading is liquidity and accumulation. If you know how to spot liquidity and accumulation, you can find better entries. And what is liquidity here is everybody's stop losses. Everybody who is trading the regular way, trading the free way, and knowing that you're supposed to put your stop loss 30 pips below your equal lows and take the price up beyond your equal highs. The banks know that. So they know that, hey, we got to give you a little bit of hope right here. Give you a little bit of hope. Oh, you made the right decision. And then it gives you a retest. So the people who were too afraid to buy here, they're buying here. You know, you got your break and your retest. So they're buying here. So they're thinking, oh, you know, we're all making money. Everybody who's learned how to trade Forex for free off of their cheap sources have, you know, they're making money off of, you know, people that don't understand the markets, they're making money. And then look what happens. The banks know that now we got all the dumb people in. So let's make our money. And they take the market down here. They take the market down here, stop everybody out. Where were these people stop losses at? Oh, that's right. 30 pips below in this area. That was their stop losses. 30 pips below. Where were they targeting? Up here. Did either one of these traders win? They definitely did not. And that's what happens time and time again. And this doesn't just happen on, you know, the 1 hour time frame. This happens on smaller time frames. So same scenario. It's fine. Well, same scenario here. Here's what happens. You got with our scalpers, right? So scalpers here. If we play this, we kind of look at this a little bit better. You got your scalpers here. Your scalpers are placing buys on every break and retest on a small time frame. But they would have a little bit of a stop loss because they're trading a small amount. Well, the bank knows where that stop loss is because think about where you're trading. You're trading on a platform, a broker, and you're placing orders. Don't you think the broker can see how many orders are being placed, where the stop losses are at, where people's stop losses are at? Say for the people who sold up here, you know, this equal high, people that sold up here, where are their stop losses up here? So they go and they take out everybody. So we go here, they took out everybody. They took out their stop loss and they took out the seller stop loss. So both the buyers and the sellers are out. And then what happens? The big move happens. The big moves happen. And they accumulate again. So we go here, they accumulate it again.